Hey guys, welcome back to another episode of the show. Thanks for tuning in with me today. Question for you. Have you ever sold a house and had to move really fast? Well, between renovations, flips, and investment properties, I've sold north of probably 60 properties over the course of the last 2 decades, and recently I sold another one. This one I happened to be living in at the time, and that was not intentional. It was just one of those things that unfortunately happened. But out of close to 100 transactions throughout my career, this had to be one of the worst. Nothing was typical about it. It wasn't a common close. So of course the timing of the closing and the events that led up to it was the absolute worst. Sometimes that's just the way the cookie crumbles, but the course of events that played out and the availability of other properties that I had, basically in short, landed me in a temporary Airbnb, which is super ironic because I was just last week doing an interview on a news segment about Airbnb and their stock on Fox, which is segueing us into today's episode. Back in 2015, I started getting into Airbnbs. It was a fresh, new concept. Everybody loved the novel idea of renting out someone's home versus going to a hotel. And as an investor, they brought in much more revenue than a traditional long-term hold, which also provided flexibility to use the property. So if you had family or friends, they could stay in one if it was ever needed, and that's obviously not something you can do with a long-term lease. This ease and flexibility, along with some of the awesome people that you met along the way who would use your place from time to time and come back time again, it made it a lot more fun. And a lot of investors thought the same. And because it was new, there was a great deal of demand, not a ton of supply, so occupancy was really strong, and rates, again, outperformed other types of investing. So personally, I added several more to my portfolio in 2019 and really lucked out when COVID hit. Because during COVID, Airbnb became a powerhouse in the travel industry. Due to the restrictions, it became far more popular than traditional hotels, and it became an extremely popular investment venture for real estate investors who were looking to make money during the pandemic. Again, not to mention higher revenue per property long term. But during the height of the pandemic, having Airbnbs drastically changed. As an investor, it went from investing into a property to having a hospitality business, not something that I or many friends who were investing at the time saw coming, nor did we want to be a part of it. So although the returns were greater, so were the headaches. So what's happening with Airbnb now? Well, Airbnb has lost a lot of market share again when their stock dropped another 12% just a week ago. So is the empire falling, or is there a chance for them to reclaim their throne and dominance over the travel industry? Some are saying it may be too late, while Airbnb says the data about customers preferring to stay in hotels again is misleading, and they're doing just fine. So on today's episode, we're going to dive in to what's going on, what Airbnb is planning to do about it, and what you can learn from their approach. And as always, we will talk about how you can apply this to your business. When Airbnb got their first rise, it was really due to the appeal of having your own private home and the ability to feel like you were still at home while you were traveling. It became a great alternative to hotels for so many people, which traditionally stick you in a room inside a big building with hundreds of other travelers, no privacy, no access to dining rooms and pools and yards for your dogs. So then when we add in COVID restrictions and everything that changed in the travel market, Airbnb and the investors really experienced an unprecedented boom. The company's revenue skyrocketed, demand for short-term rentals reached all-time high, and people who never considered renting their homes before jumped on the Airbnb bandwagon. And the platform expanded rapidly to meet all of this new demand. And it seemed like Airbnb was perfectly positioned to dominate post-pandemic travel, but not so fast. Basically, the market's like, well, I don't know yet. Let's see if we are going to go there. Because as the dust settled from the pandemic, travelers began to reassess options. Hotels, once considered the less desirable option, started to regain its appeal. The consistency, the reliability, and often lower prices, options of points began to draw customers away from Airbnb, which has issues like high cleaning fees, long lists of checkout chores, and inconsistent quality control. These are just a few reasons that have driven many former Airbnb loyalists back to hotels. Having an open platform where the host or the investor controls the quality of the traveling experience may sound great in theory, but every time a customer experiences a bad property, that comes back to you, regardless if that house is in Jacksonville or Jackson Hole. And even though Airbnb or other property owners have no control over those bad experiences, their name on these properties are attached, and it can negatively affect the overall reputation of Airbnb. According to recent data, hotels reported an average daily rate that was 26.6% higher than short-term rentals in 2022. And this gap has continued to narrow, making hotels an increasingly attractive option for travelers. I speak about innovating a lot on this podcast, and that's exactly what Airbnb is trying to do in order to get ahead of this. They notice that they're losing their grip over the travel industry, and Airbnb is now looking to expand its model into hotels. This move was seen as an attempt to diversify offerings and capture a broader share of the travel market. However, this expansion has come at significant cost. Airbnb's marketing expenses have skyrocketed as the company invests heavily in promoting its new offerings. And the company also has to contend with rising operational costs as it works to integrate hotels and other new services into the platform, which is crushing their profitability. Despite these efforts, Airbnb's revenue growth has slowed and the company's bottom line has truly suffered. In the most recent quarter, Airbnb's revenue increased by 11% year over year, but net income fell by 15%, and earnings per share missed analyst expectations, which is why we saw a decrease in the stock. So this raises the question, are they pivoting too late? Knowing when to pivot in your business is essential. And so I want to take this back to you. Do you have a product, a service, an offering, a location in your business that you need to eliminate, to delete, maybe sell off? And can you do so without shifting from your core business model and value proposition that you currently offer customers? You know, Airbnb has built a brand of offering unique, personalized experiences that hotels couldn't match. Now, by moving into the hotel space, Airbnb may risk diluting its brand and ultimately alienating its core customer base. Not to mention, the hotel market is so competitive. Like when you're trying to compete with mega companies like Marriott and Hilton and Hyatt that have dominated the landscape in the industry for so long, Airbnb trying to enter this market might be too late or simply too difficult to break in without having a massive rebrand or a huge budget to do so. So what do you think about Airbnbs? Do you feel that it's changed? Do you prefer hotels? Personally, I cannot wait to check out of the one that I am in this week. That's it for today's episode. Let us know what you think about this episode, this format, and the new season of the show. I'd be honored if you'd leave us all here a 5-star review on Apple Podcasts, on Spotify, or if you're watching us on YouTube, leave a comment and share this with someone who you think might find value. Thanks again for tuning in and spending this time with me today. We'll see you next time.